Again, good evening, and welcome to tonight's video for the futures market here, Simpler Futures. And this is Neil. I'm going to do the video tonight. Well, first of all, it's hard to imagine or really believe that it's been a year, but tomorrow's the anniversary from last year's August 24th market open limit down. I called a mini flash or whatever you want to call it, but essentially the market opened and then traded limit down, reopened, and then kind of traded up from there. But that was a year ago tomorrow. It's pretty amazing. Here's what we're dealing with though today, in today's market a year later. We got a market that's been trading pretty consistently in this upper area here, and you can see how it's putting it giving us the this is a volume histogram, okay, and I've got a distribution up here on the top that's showing balance up here at the top, and I've got another distribution down here on the bottom that's showing some balance down here and agreement and value down here at the bottom. And there's a line in the sand or division between the two right there at approximately 2172 in the S&P. Okay, so what I'm getting at is that for us to see any considerable downside trade, that kind of thing, we've got a level to beat here, and it seems pretty clear on this volume distribution, this histogram, what that level is, and that's 2172 here in the S&P. If we can get through there, I would initially be targeting this 61 level, 2161, and then after that I'll give you some more levels that will be 2152 and 2141.5. You can find the 41.5 on that swing low from a few weeks ago on a Tuesday if you're looking for it. But that would be the objective. That would be back here this day, which was the 2nd, I guess. Yeah, August the 2nd on a Tuesday. So anyway, you got a plan on this double top up here at 2191 and some change. You can see you got a couple of tops right there, leaving wicks on the top. If we are to see, and I'm not saying that we will, because I've tried to be bearish this market, and we've just sort of been grinding higher. Now, while we're grinding higher, you can see that we are leaving wicks on the bottom. We're leaving wicks on the top and bottom. Price is sort of stuck right there in the middle. But I do have a plan, and that is what I just shared with you. That is, in order to really get some downside momentum going, we're going to have to beat that 72 level. And below 72, I'll target 61, 52, and 41.5. And there's the 41.5 right there. So that will be the plan in the S&P. If you want to look outside of the S&P, because this is admittedly rather tight and choppy, you might look at one of a couple of markets, and that would be crude oil. We looked at this last night. We were looking at the fact that we've had this rather fantastic recovery from the lows. I ran a fib from the dead low and also from here, and I got two levels. One was at 46.5 and another was at 45.5, and I decided we would just call 46, split the difference, and call that the target. Well, we found that 46.5 level today, bounced a little bit. With any fortune, what we will get will be then the continuation over the next session or two down into that 46 and 45.5 to make the next couple of targets. So that's the plan there. And then the other thing that seems to be moving around a little bit right now is in the treasuries. And this is going kind of according to plan as well. You can see the wicks here as you look left at this 170.5 level. So last Friday we talked about this and looking for the bid. The first objective was met at the 172.5 right there. It's now forming some upward sloping lower trend line support right there, where now if we get a day or so of rest back into the averages, we'll look for continuation, some more continuation out of the hole here to the upside. As I've been covering this in the premium video from the 170.5, we have added the one little caution flag or caveat to this, and that is that Yellen does speak on Friday. And if there be any hawkish tone to that rhetoric, then you could actually look for this to fall apart and for the bonds to actually correct and trade lower. That would be the one warning, as you know, against the otherwise intended trade and direction. So let me leave you with that for the free video. That's actually a couple of trades that we've been looking at in the premium video, and I'm going to hop over there right now, look at a few things. Namely, coffee was waking up a little bit today. We got something getting ready to break loose in cattle, and a few other things. So I'll be with you again soon at the next update. Until then, you guys take care and have good trading. Good night.